You had the countdown and everything, and you still had your finger in the way when we went live.
That's how I roll, mate.
How you doing, buddy?
Good, mate. How are you?
Tickety boo, my friend.
Sort my camera out, mate. I'm not very professional at this.
There we go. There we go. So, guys, thank you very much for tuning in live. This is your show, Pips Like a Pro, with me, Gavin, the host, and the man, the myth, the legend, former professional trader, working for some of the biggest banks and hedge funds in London, Mr. Andy Demi. Thank God he's never going to be a cameraman in his career, or never even in a former life, mate, because your camera skills are dodgy, to say the least.
Yeah, that is true. I'm not very good at this stuff, mate. But
you are not. It's lucky, though. You are an expert in trading, and that is what this show is about. So just to let you know, tomorrow, same time, same place, we'll be talking about all things crypto. But today is Monday. It's the start of the FX week, so we're going to be focusing on FX. If you've got any questions, put them in the live chat. But before you comment or ask a question, just make sure that you register on the StreamYard link below so that we can see your name and your face, like a couple of people who have logged in. We've got Brucey in the house. Hi to you, Brucey. Thanks a lot for logging in. And also Zach tuning in live from Japan. I think. Yeah, through me, because normally he's on YouTube, but he's on Facebook this week. He's freshening it up, keeping it all interesting. So let's jump straight into the content this week. And we're talking about how to get in a peak performance mindset, regardless of whether it's an actor before they go on set, whether it's Michael Jordan before he was shooting a basketball shot, whether it's Stevie G, your idol for Liverpool, right? You guys, when you were working in the hedge funds, you didn't just kind of just rock up. I'm sure you had a procedure to get yourself in that peak state, to get yourself in the zone or in the flow. So many people just think that they can just roll out of bed or just literally just like write things down on the back of a piece of paper. If it was that easy, guys, and you just had to know technical analysis, everybody would be doing this. They'd be like you, having their own show, hiring someone like me to be a host, and everything would be swimming. But it's not that easy. So what I'd love for you to do is just share your journey with us from when you were in this position, wanting to be a professional trader, and then what you've noticed as you've worked your way up through the ranks to having your own kind of hedge fund, managing millions and millions of dollars, managing a team, and then now becoming a lifestyle trader and having the same procedures and SOPs in place, but from the retail side rather than being on the dark side. So I know that's quite a big question, but if you can break it down and just tell us your kind of experience with how you've become a peak performance trader, that would be great.
Yeah, sure, absolutely. Let's grab the coffee with that long question.
You could have finished the coffee, mate, with how long that took.
That's true. Yeah, no, there's so we can talk about a lot of things, but something that's important is that a lot of people kind of know some of the things that you should be doing, and some people are doing it. But I also think that, and I'll speak more about that in a second, but I also think that one thing that people maybe don't focus on is just because you get in the zone doesn't mean you're going to have a great trading day, i.e. make money. So that's something to really address. I think it's like getting in the zone. It's like making sure that you're wearing the right outfit and right trainers to go for a run, right? You need to be right. That's like it should be a given. Like you shouldn't be jumping in the market without having the right mind, because it's a mind game. That's what trading is. It's a mind game. And if you can master the mind game, then you're going to have every chance of being successful. We talk a lot about this and the importance of psychology. And I know for the guys in this group, they've all heard it. Oh, it's 90% psychology, 10% strategy. And everyone kind of recites the same stuff in a way, like the ones in the know. And then the ones that are beginners, they're like, oh, okay, I didn't know that. But it's quite interesting. I think that sometimes we say those things, but we don't appreciate them as being the truth, because if they really were your truth, then you would be putting all of your focus on that side of it, which I don't believe that is the case. So I think the important thing is to really, really make it a big part of what you do. And even though it's not the most exciting part, it's a really big part, getting yourself in state. But then also on the other side is preparing a plan to get yourself out of a bad state is just as important, if not more important. And that's a little bit different. You see, okay, what do we do to get in peak state? Well, everyone knows that, if you meditate, if you go for a run, all these things really help your mindset. Like they pump positive endorphins in you when you exercise. You get clear focus. Getting a good amount of sleep is always useful as well. And obviously what you put in your body. So I think most people know those things. The thing that you should really focus on is, how do I get consistent at that? What is a structure that I can do regularly? When we were working, as you referenced, in the hedge fund, I don't think I'm doing anything different now than I was then. I think there are differences because of the circumstances, but I think in general, it's just got a different box, but it's the same thing. So like, ordinarily, I'd go to the gym on my way into work. And I'd get changed and put my suit on before I got into the office. So I would be in the gym typically about 6 o'clock in the morning, because that's the earliest I could get into the city. And I'd do a quick fire training session, half an hour. And then I'd get ready and be in the office by just before 7. That was kind of the routine. I'd normally have a protein shake or something like that, just easy on the go. And then I'd start, looking at the markets. And before I'd even leave my house, I'd normally do a 5-10 minute meditation, just kind of clearing the mind up, thinking about how I want my day to go, how I want to perform today, and getting rid of anything that happened yesterday, essentially, just kind of making sure that that's gone now. So any bad trades or bad emotions or whatever it is, making sure that was all kind of clear. So, and in many respects, I don't necessarily consistently now go to the gym early morning. My routine has had to change because of the lifestyle that I now live with family and circumstances, but it doesn't take away what I do in the morning. So I might go for a run in the morning, or I might do a 10-15 minute exercise routine at home, and do my meditation, and then have a quick shower, and then get onto the desk to start looking for opportunities to trade. Especially if I'm day trading, I have that kind of routine. But I think the thing that I think that's difficult to sort of understand is that you've got to work within your own parameters. Like, it's not perfect. It's never going to be perfect. And the most important thing is make sure that you have a routine that does set you up, whatever it looks like for you. It doesn't need to be what I do. It needs to be something that gets you in a peak state. Like when you see this, like, I don't know if you've ever experienced this yourself, Gav. Like, I could be reading a book today in a certain state, and then the same book tomorrow in another state. And it's like the book is completely different, completely different. Like, because it's happened to me before. I'm in state, and then I got interrupted. And I'm like, oh my God, I'm getting so much value from this. I'm getting it. And then I listen to it the next day, and I'm like, oh, I want to go back to that state. Like, I'm not getting anything from it today. Nothing's making sense. I'm missing stuff. So that just shows you how important your state is when you're doing stuff. And I think the time of day is also really important. Luckily for me, I do work. I work really well in the mornings, but equally I work really well at night. So I think the worst time is probably afternoons, like slump. But the mornings, early mornings and late nights, depending on which way round, I work very well. And I think that's the time to do your analysis. That's the time to do your trading, to place your orders. Understanding how your brain works, where it's in state, and then obviously trying to fit it into your routine is important as well. But I do really think the focus should also be on how to get out of your bad state when it's gone wrong, because I think that is that's probably the most understated things that we don't really focus on, because I think that's where things go wrong. I don't know about you guys, but for me, that is, if something was, because everybody can kind of get into a routine, but then what happens when you're taken off state? What do you do then? That's the thing that, because you sort of hear what people do, but that's the bit that I think needs the most focus. And I've seen like people use checklists, which is great, like things on your PC, of how you need to be. And we've spoken about this in a few of our coaching sessions, about the importance of putting things in front of you to make sure that you are acting in your own best interests. Because I think sometimes we focus a lot on things that we just tick off. Okay, let's look at the higher time frames. Is it in an uptrend? All the technical bits. But actually, are you asking yourself, am I in peak state? Am I how am I feeling about my trading? How am I feeling about myself? How's things go? Like, you're not going to that place. You're just continuously focusing on market analysis, and market analysis is not enough. Not enough, not at all.
We've opened up a whole topic of conversation here, and I really like going into the mind psychology and philosophical ways and things like that. I think the interesting thing, without going too woo-woo, is everything, if you're just literally going off a checklist, then you're still going to be in your mind. And that is where the bad experience is. In time, which is a whole nother conversation, but in this time and space, that event has happened. It's been and gone. The only place, the only reality where that bad event still exists is in your mind, which is in your head. And the whole point is, if we can get out of the head and into another space and operate from there, then there's an infinite space, right?
Yeah. I mean, look.
That's the holy grail. Good luck getting there. That's the holy grail, right? We're all trying to get there. So. Yeah,
absolutely. Look, I think that the reality, maybe what a lot of people don't share, is that just because you're successful, so you have some success in trading, like you're never going to be perfect, and I'm absolutely far from perfect in dealing with emotions. That's the truth. Like, I have just learned certain things that help me overcome bad emotions. It's not about the bad emotion will come. It's about how you react after that bad emotion. It's like, that's the most important thing. And that's the bit that I guess I would say the best words are, like, I'm trained to deal with that, because they do happen. Like, I can give you scenarios, like recent scenarios where I'm like trading and I've had a good day and I want a little bit more from the market. And then, let's say, for argument's sake, I had a target to hit of £1,000 for my day, and I'm up, say, 700-800 quid for the day. And I just feel like, yeah, there's a little bit more room to go. The trades are fine. They're all day trades. And then I've got to leave my trades. I've put all my stops are fine. I've chosen stops up, and I've got to go downstairs and deal with the kids. Like, it's the time where I help my wife. And then I leave the trades, come back an hour later, and my £800 is now £200, for example. And I'm like, the words that come out of my mouth. Like, yeah, and I'm a bit annoyed with I'm annoyed with myself at this point. I'm like, without swearing. So then I'm like, I now have to handle that emotion of like, what an idiot. Why didn't I just cash out? Because I can't focus. I can't, because day trades require me to ideally be in front of the chart, so that although I've trolled my stops up and everything is risk managed, to maximize my gains, like I read price, like I can sense when markets are going to react. And obviously when you're not watching, you can't sense that. So like what would have happened if I was just looking at my screens, I would have seen the market correcting and I would have ended up just sort of banking maybe £700 and then just be done with it and then just close them up. So then what I end up doing is, okay, like you just handle it and you say, okay, fine. You've done that. It's fine. Let's regroup. I've got some time now. Let's go through these charts. How are they looking? And then I ended up wasting about 2-3 hours to get my account back up to that level again. And then I cashed it out at that point. And the irony of it is that I did it because I got myself back in state and then refocused and said, right, okay, what's happening on the charts? I got back to that point, but then I still had that target in mind. But it was like, in my mind, I was like, look, that's what I should have taken today. And like, I'm going to just close them now because I don't want to sit through another drawdown. And then I've already wasted 2-3 hours now. It wasn't 2-3 hours, maybe an hour and a half. But literally, I closed them. This is the thing. I think people will relate to this. I closed them. I did the sensible thing. And then literally, because nothing was 5 minutes later, it goes bang. I'm like, honestly. And that literally, if I didn't press it, I would have hit my target. I would have hit the target for the day. But I was okay with it. And I'm like, okay, well, that's fine. Let's be positive because I've managed to claw back what I should have taken before. The thing that I've lost is my time. And now you handle that emotion, you let it go, and then you close up. And then the next day you come fresh and you say, well, all of those events happened. Now I just start again. But I've learned from that experience. So it's like you take that experience and you have it in your background, but it doesn't affect your next day's trading. You just go in completely fresh and start again.
That's where the real skill is, right? That's where a professional performance comes in. Like, because that's the bit that's not easy. Like, it might, like, no. Just thinking about it, you sat on a hedge fund trading floor or trading on a trading floor for a bank, and you're in that mindset where something's gone against you or you could have got more, and you're in that with everybody else, competing with everyone else, and then maybe that happens for like 2 or 3 days. Like, you've paid your dues, you must have had days like that when you were coming up through the ranks, right? How do you kind of but you're like, you've had to go through all of this to be able to sit here and say what you've just said. So how do you go through those days when you've had like the 2 or 3 crap days?
Yeah, do you know what? You just, you accept it's part of the game. And I kind of like it in a way. It's like, it's like a sport, right? It's like football. If everything went perfect all the time, you'd have the Scottish League, which no one's interested in.
Apologies to our Scottish viewers.
No offense, sorry, any Scottish people. But do you know what I mean? Like, that's what makes things exciting, and that's what I love about trading. It's the thing that you hate it, but you love it because that's the thing that keeps you going. It's like the being challenged part. It's like, that's why I say, like, that never goes away, unfortunately. It's fortunate and unfortunate. That's why it's always interesting. It's always, you know, I've gone through every kind of scenario. That's the thing. I guess that's the difference. It's like you're going to go through those scenarios where you have a really nice profit and you end up scratched for the day. And you're like, what an idiot. Why did I not stop? Like, I could have just stopped. And then you have to then think about it and say, okay, what did I learn from that experience that I could take with me for the next opportunity? Because that's going to happen at some point again. That scenario, that deja vu will be there again. That feeling of like, okay, I'm there again. But this time, I'm going to have some rules in place that I can do things slightly differently. What could I do? Like, so when you're out of that emotion, you should always go back and say, what could I do next time? Because there's something there that you could pick up that's going to make you a lot of money in the future. Because next time, maybe you're like, okay, do you know what? If I'm up 3% on my day, I never leave the table with a minimum of 1.5% is guaranteed. You could have come up with that rule. So it's like, if you have, so if you know your peaks where you're like, okay, I've made a lot more today than I normally would, you have to maybe create a rule then that says, like, if I make, I don't know, 5 grand today, the minimum I walk away with is 2.5. So if I make $1 grand, the minimum I walk away with is 500. So that way you're like, okay, I've got the opportunity because I'm in flow. Let me see if I can get a bit more out of today. But if it's not going to happen, I'm going to at least take away £500 and I can start again fresh tomorrow. So it's like, because I don't believe in cutting your days, like having targets where you cut, because sometimes you're just flying, you're flowing, you're seeing things, you're seeing so many opportunities. You can make that grand, 5 or 6 grand, and then it just eases your week and it helps you hit that monthly target. So you never cut. It's like cutting profits. Like, it's like cutting yourself when you're flowing. You don't want to do that, but you want to create some rules where it can go the other way. So you make sure that psychologically you don't end up in a bad place.
Really interesting perspective, mate. And that's a whole nother show. It's really cool what you said actually about, not about the Scottish Premier League, but just about like the peaks and the troughs, right? I was listening to a talk the other day and the way they described it was really interesting. It's like the whole point of why you have the highs and the lows, when you've gone through the low to get to the high, we're not, somehow in life as humans, we're trained to think we have to try and stay on the high, but that's not natural. That is not life. And this guy was saying, you get to the top of the mountain, you're meant to see where you're going next. And then you get ready again to start your journey. And you know that you're coming back down again and you know you're building up and you're climbing the next mountain. That is life. That is momentum. That is moving forwards. There is none of this, right, well, I've climbed to this one mountain. That's it. I'm just going to set up camp and just wait for someone else to come to the top of the mountain with me. That's not sustainable. So
no,
and anything.
And when you stay on the top of the mountain, you're going to eventually fall if you're not proactive. That's the truth. Like, you can't rest on your laurels and, oh, I know enough. And I see traders go through this period, some really good traders who think they're it, who think they're the best, and everything they touch turns to gold. But the problem is that when you get, I can see, it's almost like seeing something overbought. Like when you see people's words and the way they act. And I learned that really by training people. Like, I could see some of the juniors some of the things that they would say, and I'd bring them down and say, great, like, it's good to be confident, but not overconfident, because then you start to do things that you risk too much. You think, oh, this is definite. And then you get bang, the markets teach you a big lesson. And then then you're like, from top, you're at the bottom. We want to try and keep you in that sort of middle quartile where you're like, I'm confident, I know what I'm doing, but I'm aware there's a sniper that's going to get me somewhere. So let's make sure I'm in state. I believe in what I'm doing, but there's a real fine line. You don't want to be like, I'm the best, because then you've got nowhere to go but down.
Wise words, Mr. Demi. As Zach saying, without valleys, mountain tops are boring. Very well said, my friend. Very succinct. When you were talking about making your checklist, someone was saying their checklist is coffee tick, coffee double tick. Very good. But we don't know who you are, so please log in.
No.
And then Brucey was saying it's harder to get out of a bad mindset than it is to get into a good mindset. Well, obviously now you've just heard Andy describe his professional background, how he's managed to start doing that for himself over the years, and hopefully you can now implement that into your own trading plan. So look, I think we've covered the peak performance bit for that part of the show. I want to focus on the biggest FX news of this week. And then from there, if you're new to this part of the show, we're going to break down the high impact news that's coming out across all the currency pairs, or across all the majors anyway. From that data, Andy will then use his spider senses to say, right, I think that there's going to be a good trade set up potentially from this data on this currency pair. We'll then break that down live, jump into the charts, and within the next 15 to 20 minutes, our aim is to give you a professional trade setup of the week that you can take away and hopefully trade this week. It's not always going to happen. That is what being a trader is about. And the thing that you can take away is sometimes it's just as important to know when to put something back into the water if it's not low risk, high probability, which is what Andy's mantra is. So with that being said, if you want to jump into the news, then we'll go into the live setup of the week.
Yep, absolutely. So we will break down. The lights popping up everywhere. So the big one, guys, this week is the FOMC statement. There's a lot going on in the week, but the big one is the FOMC statement. I think this is going to be very impactful for not just the FX markets, the stock markets, the crypto markets. I think, you know, we're going to kind of get an idea if there's going to be a hike in interest rates, which basically encourages people to move away from risky assets. And I do think that this could have a kind of cross asset class influence. So I don't think this is just on the FX markets. I think that this month's FOMC statement is very important. So you definitely want to look out for this tomorrow to see what happens there. I think there could be a lot of volatility potentially. So that's on Wednesday. Before that, there's a few bank holidays. We've got got an election in Canada tomorrow. We've got the minutes from Australia. Bank holiday in China there. Let's see what's out on Thursday. Anything important here? These have got some importance. A lot of bank holidays, not one here. So these aren't going to be hugely. I mean, I know they're flagged as red, but they're not going to really impact the market too much here. This might. The monetary policy summary, and then we've got Fed Chair speaking on Friday, following on from the FOMC. The big one is this one. This is what we've got to watch out for this week. So the US dollar potentially could create a lot of volatility depending on how it goes and what is being said. So yeah, it's a tricky one. I know that ordinarily, we prefer to focus on currencies that are being affected by the news that could have volatility. I think, for swing trades, it's absolutely fine. Obviously, this is going to have an impact on your positions. So if you are looking at day trades, I would kind of avoid Wednesday afternoons. I'd be looking to close out. Getting alerts everywhere. Sorry, guys. I'd be looking to close out for day trades. Look, for swing trades, you can definitely keep them in. I think you have to factor in that you've done your analysis and you've got your stops in place, and the stops are going to be sort of a bit further away. So I think this week you want to kind of day trade, maybe today, tomorrow, maybe in the morning of Wednesday. Typically, if you're trading on a Wednesday morning before a big statement, you're probably going to get a range bound market. So bear that in mind on Wednesday, that it might be good for some scalps up and down. You're unlike, I mean, there could, look, this is just generally when people are waiting for a news event, that's what typically happens. So, that's what I would be looking out for, potentially some range bound trades on Wednesday, whilst people wait for the statement. But then sometimes, people speculate on what's going to happen, and you may get a push up, in which case I'd be looking to fade it. So if you get for example, a DTR hit on Wednesday before the statement, I'd definitely be looking to fade that the other way. And then what you could do, one of the things that we used to do quite a bit in the hedge fund, would kind of front run the news. You try and get into a trade with some profit, and then basically move your stop to break even, and then sometimes the news event would go your way and you'd get a massive win. And worst case, you get a break even stop out. So that's something to look out for. You could potentially do if you manage, or if you manage to kind of get into a swing trade that's in profit today, tomorrow, you could do the same thing. You can move your stop to break even and run it through the news and see what happens. If it goes your way, then great. So should we take a look at a currency pair?
So yeah, with that being said, what I'm guessing you're going to go with a dollar pair, right?
Yeah, I'd like to go through the Aussie dollar. I think that's a good pair, and it's one that I've been looking at. So if I bring in the Aussie, we can do the Aussie dollar. That's okay with everyone.
Great.
So let's have a look and see what's happening on the Aussie. So if the dollar, so here's the thing. So bearing in mind, if we are going to get a bullish statement, potential interest rate hike, then we're looking at the dollar getting stronger. Therefore, this potentially pushing lower, at least initially. And then the flip side is also true. So if there isn't, if it's depending on what's said, like if it's bearish for the dollar, then obviously this will push up. So let's clear this up and start from the beginning very quickly. We'll look at the weekly time frames. Let's just assess some of the key points here that the market might want to target on the higher time frames, and then we'll take it from there. So let's start with looking at some of the key points here that the market has recently shown to be resistance, and just literally focusing on resistance points here that the market might find as support. So that would be a very nice zone potentially in the long run. And then on the upside, I would like to look at past support points like there. So that's already acted as a target for this market. And then we can see there's some past support over here that became resistance that could find, and then here. So that's kind of really where we focus. That's it in a nutshell. Okay, see how quick that was. So you can see there, this is where the market's at, and right now the market has essentially gone through this line. We've got this piercing line candle formation. We found this old support that became resistance. It's pushed back, and now we could be looking at potentially this here as a support point, and I could even push this up a little bit because I do like that there. But let me just check and see where the 618 is. So we always want to see where is the 618 of this move. We'll draw our manual fib there, and we'll see what it looks like. And the 618, we've just reached it. So we're just there right now. That's a good sign, 72.36. So we're kind of in that zone now of potentially the buyer stepping in on this. And it's quite nice that we're on this line as well. Can you see, guys? Like, look, resistance, 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 resistance. That looks quite a nice area. I do like the fact that it's this level bullish candle there, and then it's kind of testing now. So if we kind of go through this, then we're looking to really for this market to go down here, and then we'd be looking for a potential bounce. So that's the higher time frame in a nutshell. Let me see if there's anything else that I can spot here that's going to be useful for us. So we'll get rid of this because it's messes my charts up, and I will see if there is anything else here. So let's have a look. So where is the market reacting? So we'll see if the market is liking that. I think that is slightly better. Let me have a little look around. Yeah, it's quite nice in general. Yeah, so I'd probably put that there. So that's, if it does bounce up. One thing I didn't make a note of, guys, is the target. So where is the 1618? Let's have a look. The 16. Oh, look at that. The 1618 is literally on our line, 77.37. So that would be a nice swing trade long if we were to get that. Okay. So yeah, that would be a really nice push towards here. Obviously, if it goes back deeper, then we'd be looking at a lower target. So for those that understand how the fibs work, let's take this line also and project. That's quite interesting. I just wonder there if we're going to kind of just push a little bit lower and touch that line there, maybe towards 72, and then potentially have a little bounce. I like that idea. So with that being said, I think we brought this up last time, and we spoke about the odds of it going from here to here, and it kind of did that, pretty much reached that trend line. Now it's coming off. Let me bring in plain template. So this is a 4-hour time frame. We can just quickly look at the daily chart as well and see if there's anything else here that is important. You can just put in your, I can just quickly put in my levels just to see if there's anything immediate. That one there, 75, that's a clear bit of resistance. So you can just get rid of them once you put them in. So you've got that level there is obviously reactive as well. 71, 77, 71, 78, that kind of level. It's good to know it could. So let's just quickly check the fibs on that, guys. If we took a high to low and it went down to there, where's that pullback? Hold on. That would be a 786-ish, which would take you up to the, oh, wow, look, that's perfect. That's literally textbook. So we've got 7, look, if it goes here, I'll tell you what I'm going to do. No, it's fine. I'll just stick to the, I'll stick to this, it's fine. So, one second. Let me see if I can just do it with the, because it makes it clearer. Yeah, I think we've got a potential really nice setup here, guys. I'm going to share. Doesn't always happen. Don't know if this is the, no, it's the wrong one. It's missing. Yeah, no, that's fine. I've got the wrong. I haven't got the latest script, but it doesn't matter. You can see now it's color coordinated. And if I bring in my pen, let me explain what this means. This basically means that if this market does an A, B, C right on this daily level, which is the yellow line there, right? So we color coordinate them. So if this kind of comes down here, and remember what we looked at before was a weekly chart. So it's almost like a test on the weekly, and then look, you've got a double level here. So that takes you up. So a very nice buy entry for me, in my opinion, will be around this sort of area here, somewhere around 71.80 would be a great buy zone. But anywhere kind of from here to here, you could start accumulating, and you could have a target of 75. Now, if I just go back very quickly to the weekly time frame, so let me just make sure I go back, so in case people didn't. So it's around the ideal entry 71.80 to 75.75, but of course it may not get there. So you can look at the low time and start accumulating if you want to play a swing trade. So you just dollar cost average in and make sure your stop is either below this A, or if you want to be really, really conservative, you put it below this massive block here. So you can put your stop a bit wider. It increases your probability quite a lot. In case, because look, the markets love to do this, don't they? Where they take out a low and then go. Seen that so many times. So you could just average in if you wanted to. You could even leave some on the table here for a swing trade with a stop there. That's the kind of passive income swing trade that's very easy to do, but you'd want to increase your risk on something like this because it's going to take a little bit of time to actually fulfill. So you might want to sort of, if you normally do 1%, this kind of trade, really you'd be looking at something like 3%, because it's just going to take too long. So if you did 3%, you might be making, say, all in all, maybe 6%. For the, which is close to your monthly target of 10. Let me see if there's anything else I want to share there. No, so just have in mind 75.75. If we go back to that weekly chart, let's have a look and see in a different color, maybe where's 75.75. Now I want to ask people why they like that. What is it that appeals to you about that target? Because straight away there's something there that I immediately think, great, that yellow target. And then if I just make this this is the ideal entry. Okay, this is the ideal entry, 71.80 there. Boy, do I love that a lot. And for those that have been following me a long time, they know that if I say I love something, it means I really do love it, because it just ticks all the boxes.
So tell us why. Tell us why for all the newbies there. I'm sure even some of the intermediates and maybe even advanced are scratching their head right now. So
yeah, well, you've got sorry, mate. Yeah.
No, go ahead.
No, absolutely. I will.
You're in a peak performance state, mate. Don't want to disrupt the flow.
Absolutely.
You're in a peak performance state.
So there's a couple of things. One, it kind of really, I mentioned before, like, oh, maybe it will go down and test this this market angle line here, maybe a little bit lower. And then when I looked on the daily chart, it made a lot of sense that it might do that, because it's on a daily level, and then the fib target, the fib pullback gives you a perfect double level daily target, which often means the market will just get sucked back in there. When you see double levels, the market will like to go back there. So that kind of gives me some extra information. But what I love about this is that we could literally hit this and we could get up here and get our target without ever breaking this market angle line, which is the angle of the sellers. If people don't understand what that means, that's the angle of the sellers. That's so you ideally, you don't want to have a target bigger than the angle of the sellers, because then you've got to break through all those sell orders. So that just looks like absolutely perfect, like the perfect setup as a swing trade for me. If we can get this entry, and what I love about this entry as well is like, look at the clear interest in buying. Like you can see it here, right? People are interested in buying in these areas. It's definitely reactive, and it just makes a lot of sense. So yeah, I mean, your choice now is, if you like the setup, is like, do I average in, or do I just try and get the best possible price and go in with my full risk at this price? You'll make the most doing that, but obviously the market may not come back. I'm going to check one more thing, and then we're gonna wrap it up there, because this could be the icing on the cake. But even if it's not, I've definitely decided I'm going to eat the cake anyway. So if we can get the icing, it makes the cake nicer. But let's see. So I'm going to check to see where is the fib target for the 4 hour. Interesting. It's a 7. No, it's a little bit lower. So we had a D there. We had 7.700. We're looking at an entry a little bit higher than that. So we're looking at there. So I don't think we're going to get the icing on this occasion. I do like this. I do like the look of this.
That would be a pretty big spike, wouldn't it? If it did spike down.
Yeah. I think what is interesting here is, this is 75. What's our target? 70.
75.
75, yeah. Yeah, I mean, it doesn't really put me off. Let me check. Let's see what the hourly's saying as well.
So now you're going for cherries as well.
Yeah, exactly. Yeah, and it's there. It's absolutely perfect. We have on the hourly time frame, we have a D, and this, for those that understand the fibs, the way this is a buy. This is the optimal buy. In fact, on the hourly, it's a 144 fade. There. You can see that, right, Gav?
Your favorite Fibonacci play. Yeah.
What's that?
Your favorite Fibonacci play.
This is my favorite Fibonacci play, absolutely. So a fast push down into our zone. If you've done the advanced course, you know this is an absolute peach of a trade. This is, textbook. So we've got enough there that makes it a very, very nice trade setup for me. I'm going to consider whether I average in, but certainly if we can get to this, I definitely will have an order around there for sure. And I'm going to be looking, if I am going to average in, I'm going to be looking for my biggest order to be there. So if it doesn't pull back, we get a bit of a gain, but ideally we get that big push down there, and then I buy my biggest position there for that push up towards. You could go for 75. You could do this even on a shorter time frame, guys. If you don't like swing trades, I'll give you one more option. You could place your stop below this low, and you could just do a simple target of the 38 or the 618. That would be absolutely fine as well. So if you don't want to wait forever for your trade setup, you can just go for that and be out. Stop there. That'll be like a 2-to-1. Or for those that are really, really brave, you can go for the tight stop and try and make this a 4 or 5-to-1. All right, and I better shut up now, because otherwise I could do this all day long.
Dropping the mic, dropping the knowledge bombs. We love it, mate. So thank you very much for that. That wraps up the show. So it was a little bit longer than promised. It took about 15, 20 minutes, but we've given you multiple trade setups there, guys, on the Aussie dollar. So we started the show speaking about peak performance mindset, how to get into the state. one of the things that hardly anybody ever talks about is how to get yourself out of a funk. It's all right trying to get yourself in the state, but what happens when you come out of it? That is life. As one of our viewers, Zach, said, oh, I'm going to butcher the quote. Can you remember the quote? About the hills and the mountains. Anyway, that would have been beautiful, but my memory's not quite there for all of that because I'm still taking in your trading knowledge bombs. So we went through peak performance. We went through the news. We've taken that news analysis. We've gone and looked for a high probability, low risk trade. And there are multiple entries and exits for you, depending upon your own trading plan, depending upon your own appetite for risk. So that is it from us. Anything you want to say before we bounce, mate?
No, I think just something to to stress for people is just because something's good, a setup is good. I know it can be tempting to say, oh, if it's good, let me just put more risk on it. No, you stick with your risk management. Like, it's really, really important because trades can lose. Like, we can't win on every single trade. And yes, the setup is a very good setup. I can put my stamp on that, but it doesn't mean it's guaranteed to win. And it's really important. The last thing I want you to do is go and put a lot of money on it, and then it doesn't work out, and then suddenly you're feeling bad. Like, just risk an appropriate amount that you're comfortable with if you're going to take the trade, but it's a high probability trade, and if you took that kind of trade, more often than not, you'll make money. That's just so I just wanted to just kind of make that point to make sure people are safe.
Wise words, my friend. Safety first in everything, especially trading. So with that being said, we'll be back tomorrow, same time, same place, talking all things cryptos. It's been another interesting week in the crypto market, and I know you've got lots to talk about and lots to share on that. So we're going to zip that until tomorrow. Guys, wherever you are watching in the world, whether you're watching live, whether you're watching the repeat on your own time on demand, thank you very much for tuning in. I've been Gavin, the host. This has been the man, the myth, the legend, Mr. Andy Demi. Thank you very much, guys. We're out. See you tomorrow.
Take care, guys. Paseano, tu bella ciao,